Focus down on the sectors. Focus down on the industry groups. What industry are you interested in? Where do you work? What do you know about? That sometimes is a great place to look because you know what's going on in that particular industry. Once you focus on an industry that you like, evaluate your target company's fundamental rating or ranking. Pick one that's a winner. Pick one that's strong right now. After all, if you're picking a baseball team, you're not going to pick the girl with a broken arm. You're not going to pick the guy who's got a broken leg right now to be on your team. You're going to pick the biggest, baddest, strongest person you can get for your team. Just so we want to pick the best stocks, the strongest stocks to invest our money in because our money is hard-earned. When you evaluate your stock's health on a weekly price chart, remember, use an indicator like the one we've used here. Consider using a 30-week moving average, and remember, it must be rising and your stock price must close above it before you purchase shares. If your time frames are shorter and you don't want to stay in a stock that long, put a 20-week moving average on that price chart. You'll find it will follow the price pattern much more closely. You're going to get stopped in and stopped out a lot faster, but that may agree with you. It's almost, think of a moving average as a safety net that keeps you and your money from falling down a lot harder and faster than you want to fall. Once you've evaluated your stock on a price chart, see where it is in relationship to that 30-week moving average. Has it risen and doubled and tripled in price? Maybe you want to wait till it pulls back a little bit. Maybe you want to move on to an alternative stock. Understand, we have more than 9,000 individual stocks out there, more than 9,000 opportunities to invest our money in a high-quality company that can earn us money in the years to come. So let's not pick one that's inferior. Let's not pick the girl with a broken arm or the guy with a broken leg. Let's pick a strong one. And using these 3 criteria and then applying the last one with our 30-week moving average tool, this should help us keep any losses in the stock market very, very low and our gains very, very high. Now, I've said this 100 times already, but we can't make this point enough. Don't forget your insurance. Whenever you purchase a position, whenever you purchase it, your next step is to place your initial protective stop, your insurance, so that if the markets go against you, you never take a big loss. We can do it automatically over the internet. We can call our broker and do it. This is our insurance, and it should be non-negotiable. Don't kid around with yourself. Do it. You're going to be so glad you did. After you get used to looking at price charts and seeing where the buyers come in, where the buyers come in, where the buyers come in, raise your protective stop up so you make sure that you take a profit. So you make absolutely sure that you can't lose money. It'll make you sleep, again, so much better at night. And finally, remember, have a criteria for exiting your position, whether it's the stop loss that you raise underneath those support areas and you don't want your stock to violate by more than maybe $1, or if it's the 30-week moving average where you say if it closes 1 or 2 times below that 30-week moving average, I'm selling the stock. Whatever that is, hold to it. Whatever it is, hold to it. Develop a system that works for you. Develop a system that agrees with your lifestyle and with your personality. You can't compare yourself to the neighbor next door. It's not going to work. And remember, people will be happy to tell you all about their gains, but they rarely tell you about their losses. And finally, let's look at some overall success strategies that confirm what we've learned during the past hour. Remember, develop an effective plan for buying and selling stocks. A professional football team would not run on the field without a plan. You probably wouldn't get in your car to drive to Bangor, Maine if you didn't have a map in front of you, because if you don't have a map, you have no idea where you're going to end up. A builder wouldn't start building a house unless he had plans from the architecture. We hope the surgeon doesn't operate without an x-ray, right? So let's not us jump into the market without a firm and concise plan that's been developed by ourselves, a professional, with really good positive criteria. Spend time with your investments each week. For goodness sakes, look at the newspaper. Watch television a little bit. Where are your stocks trading right now? Where are their price ranges? Where are they in relationship to their 30-week moving average? How is their fundamental data holding up? What is their ranking and rating now? Maybe it's going up, maybe it's going down, but you need to know. Again, the one thing we always keep foremost in our minds and we never ever forget is to protect our capital at all times. Protect our capital at all times. Even if we don't make a gain, we're way ahead of everybody else if we don't let anything happen to that most precious asset. Remember to diversify your portfolio. Don't put all your eggs in one basket. Choose among different industry groups, biotechnology, financials, pharmaceuticals. Choose different stocks in at least two or three different industries in order to diversify your portfolio. Remember, when one group's going up, the other may be going down. This way, your whole portfolio won't be going down at one time. You'll also want to pay yourself, something I haven't put on our slides here. When you make a really nice profit in a stock, pay yourself. Take 10% of that profit and put it in an alternative investment idea. Something strong, something that's entirely out of the stock market, and let it grow there. Always pay yourself before you pay anybody else. I really hope you enjoyed this presentation. Remember, when you get into the stock market, go slowly, go carefully, go wisely. Start on a very small basis in the beginning, and then as you begin to expand your knowledge and expand your discipline, then you can expand your investment horizons. There's something out there for everyone. So keep those stops in, and all my best to you.